It's all about AI, and I get that. And a lot of people say that a lot of these stocks, particularly when it comes to the Nvidias and others, that we're hitting all-time highs almost daily up until just a couple of days ago. It's almost priced too much for perfection. I'm sure you've heard and covered that story again and again and again. But what do you make of that? That you're richly rewarded if you pounce on these stocks after they've sold off. I don't know how long that can continue, but what do you think?
I think there's going to be winners and losers. So if you focus on the stocks that not only have that strong AI story, but the fundamentals to back it up and strong technicals in the charts. I mean, I think Google looks really damaged. There was a lot of excitement and a big pop right after earnings, but you saw a fade, and now that gap is being filled.
Right.
That doesn't look good. Microsoft is below some major longer-term moving averages. Yes, sometimes that can be a good place to pick up shares, but I want to see a little proof that it can get back on its feet, because if you start seeing damage, that damage can continue. So instead of buying weakness, I like to buy strength after the weakness. So your Nvidias, which you mentioned, and Meta, and even Amazon today, I think those are the best three looking stocks in terms of the Magnificent Seven AI theme. But you also have these.
It may surprise you to learn that Nvidia used to be a firm that specialized on gaming. However, in the past 2 years, the business has become the leading AI operation in the globe. How did that occur? A graphics processing unit, GPU, is a sophisticated chipset that is one of Nvidia's main products. GPUs are an essential component of the infrastructure needed to produce generative AI, and Nvidia has made tens of billions of dollars from this market. Blackwell, Nvidia's most potent GPU architecture to yet, is anticipated to be released later this year, although the semiconductor industry will undoubtedly benefit from this. It's difficult to predict with certainty how large Blackwell's business will become for Nvidia. Having said that, industry research analysts have discovered some early trends that suggest the release will be a huge success. Morgan Stanley reported last month that according to its projections, Blackwell might make $10 billion in revenue during Nvidia's fourth quarter alone. Joseph Moore, an analyst at Morgan Stanley, said shortly after that Blackwell GPUs are already sold out for the upcoming year. Jensen Huang, the CEO of Nvidia, was undoubtedly serious when he described the demand for Blackwell as insane. For Nvidia, these tailwinds are definitely encouraging. The most significant stock this year has been Nvidia, which has also reported significant gains. Sales and profits for the leader in artificial intelligence, AI, have been growing at a remarkable rate, and the share price of the company has increased by over 180% this year. The company's share price has soared about 860% since the start of 2023 and more than 2,650% over the last 5 years, and that is just the most recent leg in an amazing run. As of this writing, the company's price-to-earnings ratio has risen to 66 due to these tremendous gains. There are high growth expectations associated with this valuation. Therefore, it's legitimate to worry that the semiconductor company's stock price has increased too much too rapidly. However, another valuation indicator indicates that there is still room for growth in the booming AI stock. Given Nvidia's recent business outcomes, the stock's gains don't appear to be out of proportion. For instance, during the first half of fiscal 2025, the 6 months ending July 28, 2024, sales increased 205% year over year, and over the same time period, earnings per share increased 285%. At a projected price/earnings to growth (PEG) ratio of about 0.36, Nvidia is expected to continue its remarkable rise. Because the business's expected profits growth is significant in comparison to its earnings-based valuation, a PEG ratio of less than 1.0 is sometimes seen as an indication that the stock is cheap. Although Nvidia's sales and earnings growth will undoubtedly need to slow down in the future, the company's momentum, leading position, and PEG ratio indicate that the stock still has potential. Later this year, the company plans to unveil its next-generation Blackwell processors, which might be a significant boost to sales and profits in the near future. Although there will surely be some cyclical fluctuations in the amount spent on GPUs to power AI applications, the field of artificial intelligence is still in its infancy, and Nvidia is still crucial to its development. To stay informed about the latest developments from Nvidia and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on Nvidia stock, so please share your opinions in the comments below. Now, let's dive into today's video.
It means that the future is bright for these mega cap tech companies. And I say that because they win in two ways, these companies specifically. They win in selling AI, and we saw that in Google's quarter, both across, Gemini and, their AI products. We're seeing some pretty good uptake in those. They also win with cloud. We saw that accelerate to 35% growth. Obviously, AI workloads you have to get the compute and the storage in the cloud. And as those workloads are happening, Google is seeing their growth pick up. So they're selling AI, they're enabling AI, so there's growth there. But the second way, it's kind of two-pronged, is that, and we saw this in the quarter as well, we're seeing margin expansion for the companies that are using AI to get more out of their workforce and to increase productivity and reduce costs. Google's operating margins went up by 450 basis points, or 4.5%, in part because they're using AI. Google's not the only one we've seen do this. Accenture was talking about this a couple of weeks ago. Honeywell's talked about it. So you can use AI to help margins, and we're seeing Google do that.
The biggest winner of the mega cap earnings season, Nvidia, is yet to release its third quarter update. In the upcoming years, it is expected to spend billions on new AI infrastructure and technology. The spike in investment in AI technology and Nvidia's hammerlock on the chip market that powers it have increased the company's market worth by almost $2 trillion this year. Nvidia ended October with a 9.3% gain, much exceeding the 0.5% rise for the nasdaq benchmark. On November 8, it was also selected to take Intel's spot in the Dow Jones Industrial Average. Its current market value of $3.3 trillion places it just below Apple as the benchmark and the second most valuable corporation in the world. Its impact on the market for AI chips is equally remarkable. The four largest hyperscalers, who all released their third quarter earnings this week and are at the forefront of the global AI investment race, are expected to spend $267 billion on capital projects related to the new technologies in the upcoming year, a 33.5% rise over this year's prediction, according to UBS analysts. In actuality, Amazon, Microsoft, Facebook parent Meta Platforms, and Google parent Alphabet are already on track to spend over $200 billion this year alone in what Amazon CEO Andy Jassy referred to as a once-in-a-lifetime opportunity in machine learning. The majority of Amazon's estimated $75 billion in capital expenditures for 2024 will support the growing need for technology infrastructure, primarily Amazon Web Services, as we invest to support demand for our AI services. The bill for this year is expected to increase to between $38 billion and $40 billion, according to Meta, with significant acceleration in infrastructure expense growth next year. After spending $55.4 billion in the fiscal year that ended in June, Microsoft is predicted to spend $80 billion this year. The estimated total for Google is $51 billion. Even Tesla, which is pursuing CEO Elon Musk's ambitious goals to develop autonomous robotaxis and a fleet of self-driving electric cars, expects to spend over $11 billion this year, primarily due to investments in AI computation. And Nvidia, which holds an 80% market share for the chips and processors that drive the enormous datasets being trained by the hyperscalers, as well as the enterprise clients who want to use the technology for anything from pharmaceutical research to restaurant sales, is well positioned to benefit. In fact, last month, Advanced Micro Devices CEO Lisa Su predicted that the addressable market for AI accelerators alone will reach $500 billion by 2028, growing by more than 60% a year. Meanwhile, CEO Jensen Huang called the need for AI insane. So what implications does this have for Nvidia's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication, so if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on Nvidia stock in the comments. Your support truly helps us grow. Now let's get back to the video. In the meanwhile, IDC predicts that overall AI investment, which includes software, hardware, and services, would more than quadruple from $235 billion last year to almost $632 billion by 2028. The semiconductor sector as a whole, which includes everything from memory inserts in personal computers to chips and processors in cell phones, made $500 billion in sales last year. However, as it introduces its newest line of chips and processors, called Blackwell, and gets ready for a next-generation system, named Rubin, in the upcoming years, CFRA analyst Angelo Zeno believes that Nvidia will be the main winner. Amid an AI war in the cloud, Zeno said in a recent note, Blackwell will take greater wallet share from hyperscalers. Additionally, the supply chain is verifying the robustness of AI demand, increasing visibility as 2025 approaches. Because of the strong demand from the wider market, Amazon is joining the fray by investing in its own high-performance processors, known as Trainium, which it can offer straight to customers who might not want to wait for or pay for Nvidia's coveted goods. As they grow their businesses and seek cost savings, Amazon informed investors on Thursday that some of its cloud clients desired better pricing performance on their AI workloads. In order to train large language models, Microsoft is also developing a new line of AI accelerators that it calls the Maya 100. These might both assist it in reducing its need on Nvidia and provide its Azure cloud users with a more affordable option. In a market that is still controlled by a few number of assemblers and designers, Zeno notes that the increase in demand has put the supply chain's capacity to the test. Last month, the supply chain stalwart Taiwan Semiconductor informed investors that our customers' demand far exceeds our ability to supply, a direct allusion to Nvidia. TSM predicted a full-year revenue growth rate of about 30% and reported a record quarterly profit of $10.06 billion. Additionally, it estimated that its total capital spending intentions would be slightly over $30 billion this year and even more in 2025. All of this suggests that Nvidia will have another spectacular quarter when it releases its sales and earnings figures for the 3 months ending in October, along with its outlook for the upcoming year later this month. In late August, Nvidia informed investors that its current quarter revenue will be over $32.5 billion, more than twice as much as it was at the same period last year. However, due to supply chain snags and design modifications, the business had some delays in releasing its new line of Blackwell processors. The next and largest waves of artificial intelligence are currently being developed, and the main focus is on businesses utilizing it to increase productivity and transform the way they develop their goods. Huang told CNBC last month. Huang told CNBC last month that everyone wants to be the first and have the most. The demand for Blackwell is tremendous, and Blackwell is in full production and operating as anticipated. Friday saw a 2% increase in Nvidia shares, which ended the day at $135.37 per. This move increased the stock's 6-month gain to over 63%. As always, sharing your thoughts and insights in the comments section can foster a more informed community discussion, helping everyone navigate the complexities of investing in this dynamic sector. Stay ahead of the game with the latest stock market news, data, and important updates. I share valuable insights and real-time information on my Telegram channel, ensuring you're always informed before everyone else. If you want to keep up with the fast-paced world of investing, open the description below, click the link to my Telegram channel, and join our growing community. Don't miss out on crucial updates that could impact your investment decisions.